My name is Kevin Hennessy. I'm the Chief Executive Officer at Payroll Payroll. I'm not sure. Let me see. Just want to get my background in check here. All right, so my name is Kevin Hennessy. I'm the Chief Executive Officer here at Payroll Payroll, and I put together a presentation on some of the funding options through the CARES Act. Today, we're going to spend all of our time on cash flow. Next week, I'm going to be doing a seminar on the Families First Coronavirus Act, which is a lot more HR stuff and paid leave and things like that. But today, I'm going to talk about lending programs. So my disclosure at the beginning, this is really important to us as a small business. I need you to know that we're doing our best, but we're not providing legal or business advice here. We want to make sure that we're informing you of the research that we've been doing and give you an overview of the programs as I understand them today. The way you use these programs can greatly help your business. You'll need to do your own due diligence, and you're going to have to collaborate with professionals in your life regarding your specific scenario. Today, we're going to focus on companies with fewer than 500 employees. Again, everybody here is muted. If you do have questions, please use the chat feature. I'll put another message there so you can see where it is. And if you have questions that you'd like me to address, please put them in that area. The agenda today, we're going to cover the SBA Debt Relief Program. We're going to cover the SBA Express Bridge Loans, the $10,000 EIDL grant, the Economic Injury Disaster Loan, which is known as the 7B, the PPP, which is the Paycheck Protection Plan, also known as the 7A, the delay of payment on employer taxes, the expansion of unemployment benefits, the employee retention credit that I know JB asked me about earlier today, health spending account provisions for those of you with HSAs, HRAs, etc. And then we're going to review some FAQs. The SBA Debt Relief, everybody's sleeping on this one. This is a big deal, okay? So what I want to do is I'm going to click this link, and I just want to show everyone where this exists. Guys, 1 second. So this is a program that not enough people know about, and it could be tremendous for your business. So this is right on SBA.gov, and this is one of the best overview pages. At the end of this webinar, I'm going to send you a lot of resources for where I pulled my content. And when you come down and look at this one program, it looks really small, but what it is if you have any existing 7A loans, and I believe this could include mortgages, if you have SBA term loans, you will get forgiven for 6 months. The SBA will pay your principal and interest on new SBA loans that you get between now and September 27th. So they're going to make 6 months of principal and interest payments. That's a lot different than a delay. That's a lot different than deferring payments. So make sure that if you have any SBA loans that you contact your bank and you say, I would like to have the SBA make my next 6 payments. And that's going to be huge. And it's for every single 7A type loan. The SBA Express Bridge Loan Program. So this is a pilot program, and the SBA gave certain banks, I know Eastern Bank was one of them, but they allow small businesses who currently have a business relationship with an SBA Express lender to access $25,000 with a lot less paperwork. These loans can provide vital economic support to small businesses who help overcome the temporary loss of revenue they're experiencing, and can be a term loan or used to bridge the gap while applying for the EIDL. If a small business has an urgent need for cash while waiting for a decision and a disbursement from the EIDL, they may qualify for an SBA Direct Disaster Bridge Loan. The terms are up to $25,000. It's a fast turnaround, and it will be repaid in full or by part by the EIDL. In response, so the EIDL Advance, this is also huge. Pardon me. Make sure my chat box is open. In response to the coronavirus pandemic, small business owners in the United States, Washington, D.C., and territories are eligible to apply for an economic injury disaster loan advance of up to $10,000. If any of you have not yet done this, it's imperative that you do. You go to sba.gov/disaster, and you're going to hit apply for assistance. So I'll actually show you all that. So you go to sba.gov/disaster. This is the disaster assistance. This is how you apply for the EIDL. It's extremely easy. You hit apply for assistance. This is some overview information on the disaster loan program itself. You're going to read it right here. In response, you can get an advance up to $10,000. This does not have to be repaid. However, it could come off of the forgiveness provision in the PPP, and we'll discuss that in a little bit. You're going to click apply now. A majority of you are going to select that you're an applicant as a business with not more than 500 employees. And you would have to check that all of these terms are true for your business. So you're not engaged in illegal activity, et cetera. But you do need to review these and make sure that these are all true about your business, and then you'll hit continue. The next screen is going to ask you some information about your business. It's going to ask you for your business legal name, your trade name, so your DBA, your tax ID number, the organization type. I'm guessing a lot of you are S Corps. I did get a question this morning about general partnerships. General partnerships are listed here. If you're a nonprofit, you would say yes. If you're a franchise, you would say yes, but otherwise you're going to choose no. I believe nonprofits are not eligible for the EIDL loan, but they are eligible to receive the grant. It's going to be asking you for your gross revenue for the last 12 months before January 31st. So it's not your 2019 revenue. It's February 1st, 2019 to January 31st, 2020. So just make sure that when you're running, your P&L, run it for this period and give them your top line revenue here. If you have a business with inventory and you have cost of goods, you'll put that amount here. Keep in mind, service companies typically don't have a cost of goods, like a payroll company wouldn't, as an example, and possibly an in-home healthcare agency where they're selling a service. However, a mechanical company that installs water heaters, the water heater would be the cost of goods sold. Rental property, loss of rents due to the disaster. If it's asking for nonprofit cost of operation for 12 months. If you're not a nonprofit, you put a 0. But very easy stuff. And then you're going to hit next after you answer these very basic questions. It's going to ask you for your business owner information, your name, address, and social. And then this final screen here, it's very important. There's a button on this screen that says, I would like the $10,000 advance. It is imperative that you click that if you do want the $10,000. All right, so I'm going to take us back to our presentation. And that's all you have to do for the beginning portion of applying for the EIDL loan as well as the EIDL grant. So on the EIDL loan itself, which is separate from the grant, you're going to get in line for a loan officer at the SBA to get in contact with you. I filled out my application on March 18th, and today is February 2nd, and I have not received a phone call yet to set up my meeting with a loan officer. The loans can be for up to $2 million. And a lot of people have asked, if I use the EIDL, can I also use the PPP? And you can use both, but it is important for you to consider that you don't use them for the same purposes. Otherwise, your EIDL will get refinanced into the PPP. So if you're going to use the PPP to cover payroll expenses, rent, and utilities, you want to make sure that when you talk to your loan officer at the EIDL, that you tell him it's for other operating costs. Start thinking about what those would be, because the PPP will allow forgiveness. Whereas though the EIDL would be up to a 30-year loan at a fixed 3.75% interest for for-profit businesses and 2.75% interest for nonprofits. So terms up to 30 years, each business is eligible for up to $2 million in funding. This program is funded with $10 billion, and I think the PPP is funded with $350 billion, to give you an idea on the availability of funds. So I really don't expect many businesses to get huge loans from the EIDL. It's not supposed to be used to refinance. It can be used in tandem with this SBA 7A loan, AKA the PPP, but it's important that you don't use it for the same purpose. It's a fast, easy initial application at sba.gov/disaster. And you'll need your business owner information, EIN, and bookkeeping info for the period of 1/31/2019 to 1/31/2020. You could change that to 2/1/2019. Ineligible entities are agricultural entities, religious organizations, charitable organizations, gambling concerns, real estate developers, casinos and racetracks, businesses that are not federally legal. One thing to consider is if you had businesses that existed prior to the beginning of this year, you can apply for the EIDL advance on every one of those companies. As long as you had a business that had some revenue and a tax return, you can file to get this EIDL grant for each company. You just make sure that you do a separate application for each one. The use of funds. So the use of funds on the 7B loan, the economic injury disaster loans, are working capital loans that may be used to pay fixed debts, payrolls, accounts payable, and other bills that could have been paid for had the disaster not occurred. The loans are not intended to replace lost sales or profits, and they're not meant for expansion, so they're not meant to create jobs and add new people. Any loans that you take out that are over $25,000 will require collateral. The SBA is not going to deny a loan based on your lack of collateral. However, they are going to require that you pledge what is available. All right, now we're going to get into the Paycheck Protection Program, the PPP. And this is going to be available, we believe, as of tomorrow. But we are anxiously waiting to find out the final regulations on how it's going to function. These loans will be made at your local bank. So the 7B, you apply for it, sba.gov/disaster. The PPP, you can actually work with either Brabo or you can work with your local bank. These loans will be made by an SBA partner bank. If you want us to help you, email us at service@brabopayroll.com. Today, we're talking about businesses that were started before January 2019. If you started your company after this, contact us to review. Applications will be accepted soon through June 30th, 2020. Running on Duncan. Businesses, including eligible nonprofits, veteran organizations, tribal concerns, sole proprietorships, self-employed individuals, and independent contractors described in the Small Business Act with 500 or fewer employees may apply. The 500 employees really talks about per location. So if you have over 500 employees in your restaurateur, please contact me. I can let you know how they're going to define that. You may still be eligible. The Paycheck Protection Program, the loan amount will be based on 2.5 times your average monthly payroll costs. That word is underlined because this is very, very confusing for a lot of people. It's for the 1-year period prior to making the loan. However, I have seen inconsistencies in this definition, but that is how I read it in the 880-page bill. There's a refinance provision. So it says that there is an ability to refinance other obligations into this, mentioned on page 17 of the actual bill. And it says the maximum loan size is to include the outstanding amount of a loan under subsection B2 that was made during the period beginning on January 31st of this year and ending on the date in which covered loans are made available to be refinanced into the covered loan. I'm not sure exactly what that means, if it's just the EIDL or if it means because you needed, 25 grand, you went to your bank, you got 25,000, will you be able to refinance that in here? Or if you took like a merchant cash advance through Cabbage or your credit card processor, would you be able to refinance that in here? It will be interesting to see, and we are all waiting on final information. The definition of the payroll period is different for seasonal employers. One example is the 12-week period beginning on February 15th or or March 1st through June 30th. If you're a seasonal business, your lender will help you to establish your period. The maximum loan amount for the PPP program is up to $10 million. What payroll costs are. So if you remember that it's 2.5 months of your payroll costs, payroll costs has a tricky definition. It's wages, salary, commission, and other compensation, tips, including cash tips paid to restaurant servers, any types of pay relating to PTO, final pay when you paid employees when they were terminated, also payment for group health benefits, including your premium payments, and payment of retirement benefits like 401k or simple IRA, etc. The sum of payments of any compensation or income of a sole proprietor or independent contractor paid on a 1099 miscellaneous, that is a wage, commission, income, or net earnings from self-employment or similar compensation that is an amount not exceeding $100,000 in a year. So this part is the deflating part for a lot of us, because I think a lot of people are like, I know what my average month of payroll is. I'm just going to multiply that by 2.5. It's not that simple. So the compensation of an individual employee in excess of $100,000 will not be considered. This is the real doozy. FICA taxes. So your Social Security and Medicare, and I'm not talking about the employer match. The FICA that comes out of your employee's paycheck is not part of your payroll costs. So right there, it's going to reduce your pool by 7.65%. The other thing that is not included is income tax. So the federal and state income taxes that your employees are paying is also going to be taken out of this loan amount. So just as an example, if you had $100,000 in gross payroll on the year and your employees paid $10,000 in federal taxes, now you're left with $90,000. They also paid $7,600 to FICA taxes. So you're down to $83,500 or $83,750. So your new amount is not $100,000. It's that $83,000, and anything that you paid on behalf of your employees for the health benefits, not what came out of their paycheck, but what you paid in addition would be considered, as well as 401k. So chances are pretty good for a lot of restaurants. They're going to be looking at that 83,000 number times 2.5. So Costa, who's a good buddy of mine, said, how does it work with tipped employees? Do you have a demo of what figures should be used off of the payroll report? Yes, Costa. So going back to what payroll costs are, you can actually include tips right here, including cash tips, even though you didn't have to pay them and they were paid by your customers. This is why reporting your tips is so crucial, because in a moment like this, you get to leverage it to your advantage. So Costa, if you were to look, if you ran a payroll year-to-date report and you looked at the company totals at the very bottom, as long as you don't have any employees that earn over $100,000, you're going to look at the total gross compensation. You're going to look at the company's total payments to federal income tax, and you're going to take that out of the gross. You're also going to take out state income tax, and you're also going to take out employee paid FICA. And then what you're going to do is you're going to multiply that number by 2.5 after adding in employee health benefits and 401k benefits or simple IRA benefits. If any of you have a specific question at the end of this, I know it's a little bit confusing, but I'd be happy to discuss it with you on a one-off. But I will be sending out a follow-up email to this, which you'll have an opportunity to respond to and work with myself and my team on getting a few answers. All right. So FICA taxes. Any compensation for an employee whose principal place of residence is outside of the United States. So for any of you with J1 visas, that would be an interesting one to understand that this is a stipulation. Any compensation of an employee whose principal place of residence is outside of the United States will not count. You also can't double dip. So payroll costs are also not qualified sick leave or family leave wages for which a credit is allowed under the Families First Coronavirus Response Act. Now, for my Massachusetts employers in here that have Massachusetts earned sick time, that would as PTO. Because you're not going to get reimbursed for that. But the new laws that took place where employees can get 2/3 of their paycheck to stay home with their kids because they're out of school, or the new 80 hours of sick leave, you cannot include that here and have it forgiven and also get reimbursed by the government. That's considered double dipping. So an individual or entity that is eligible to receive a covered loan is eligible for forgiveness of the indebtedness on the loan in the amount equal to the sum of the following costs incurred and the payments made during the 8-week period beginning on the date of the origination of the covered loan. So this is going to mean a lot to a lot of you guys. I'm not sure if the 8-week period, I've seen it written that the 8-week period you can define at any point starting on February 15th all the way to June 30th. And then I've read it this way, where it says the day you get the loan, you have 8 weeks to spend it. And I'm not really certain as to how they're going to finally settle on that. The first thing that we were talking about was defining payroll costs to define the size of the loan for 2.5 months of pay. Now we're talking about the forgiveness. So we've defined the size of the loan that you've gotten. There are new expenses that you can bring into this equation to be forgiven, because your payroll costs will be forgiven, but keep in mind, that's not your gross payroll costs. That's your employee's net pay, essentially, and any matching benefits. You will be able to write off your utilities on this and get forgiven during that 8-week period. This includes electricity, gas, water, transportation, telephone, or internet access. It's important that you know that all of these obligations have to exist prior to 2/15/2020. For example, rent, including under a lease agreement. Please don't go out and create a new lease agreement and say, bam, they're going to cover that. They put this in the law so that they don't have to forgive a new lease. Costs related to the continuation of group healthcare benefits during these periods of paid sick, medical, or family leave. This is costs covering the insurance premiums. You also will be able to cover interest payments on a mortgage or other debt incurred before the period for the business, excluding prepaying interest. So they were very good in writing this to not expose themselves to too much forgiveness. They're not covering your mortgage principal payments. If your mortgage is on a 7A SBA loan, you might have already asked for that advanced debt relief that I talked about earlier, where the SBA can cover 6 months of your principal and interest payments. Sorry, I'm not making a ton of eye contact with the camera. I'm focused a lot on these slides. Documentation for loan forgiveness. This is what you're going to have to provide to the lender. Obviously, we've never been through this before. The scenario that I am picturing that I think most of us can relate to is the workers' comp audit, where we're grabbing payroll reports and receipts and, did I get certificates of insurance for my 1099s? So you're going to go through an audit period. And during that audit period, you're going to give them all your supporting documents for what you're asking for forgiveness on. It's going to be documentation verifying the number of full-time equivalent employees on payroll and pay rates, including payroll tax filings reported to the IRS and state income, payroll and unemployment insurance filings. Bravo will have all of this information for you if you're a client of ours. We actually already have a PPP report available that you can just pull to simply see what you would qualify for. Documentation including canceled checks, payment receipts, transcripts of accounts, or other documents verifying payments on your covered mortgage obligation, payments on a covered lease obligation, and covered utility payments. You're going to have to make a certification of the eligible certification from a representative of the eligible recipient authorized to make such certifications that documentation presented is true and correct, and amount for which forgiveness is requested was used to retain employees, make interest payments on a covered mortgage obligation, make payments that covered rent or utility payments. Other documentation can be requested by the administrator. Loans without documentation will not be forgiven. There's one other thing that I really would like to add to this is the EIDL $10,000 advance could be deducted from this forgiveness. So they may take out the $10,000 that you got up front from what you would have had forgiven. So if you were going to have $100,000 forgiven, now you can only have $90,000 forgiven, but you'll get the 10 grand faster. Costa asked another great question. If you are back to full-time equivalents that you had in the past, and really what they're going to talk about is 75% of your full-time equivalents to not have a reduction. So we're going to cover some of the reduction piece here. If you're back to your full-time equivalent by 6/30, does it matter what your FTE week to week is? The way I've read it, Costa, at this time, I don't think it does, but I'm not really clear on it. So it's certainly something to keep an eye on. And it's also important to understand what the 8-week period that they're going to allow us to use is. If we're free to use whatever 8-week period that we want, and it could start as late as 6/30, I think that would benefit quite a few people. But the reduction of loan forgiveness. The amount of the loan forgiveness may be reduced if there's a reduction in FTE, full-time equivalent employees, when comparing to the average number of full-time equivalent employees per month employed by the eligible recipient during the period beginning on February 15th and ending on June 30th, 2019. Or you could also look at January 1st, 2020 to February 29th of 2020. Reductions also exist for certain reductions in total salary or wages of employees in excess of 25%. This only includes employees who did not earn $100,000. Correct. Yeah, Costa just said, that is what I'm getting. And the SBA is saying 8 weeks from the origination of the loan. In fact, what I would like to share with you all, let me see if I can bring this up really quickly, if you don't mind. So I'll bring this into the presentation. So this is actually on a .gov website, and I'm not sure because there's no date on it. So rubiosenate.gov, Paycheck Protection Plan FAQs. So it says who's eligible for the loan, how can I use the money to be forgiven? So it says, what is the covered period of the loan? And again, this is on a .gov website. The covered period of the loan during which expenses can be forgiven extends from February 15, 2020 to June 30th, 2020. Borrowers can choose which 8 weeks they want to count towards the covered period, which can start as early as February 15th. So borrowers can choose .gov website. Unfortunately, I do not have a ton of confidence in .gov sources. This law seems to be changing by the minute, and they seem to be changing many definitions. So it is a lot to keep up with, and a lot of this is speculation at this point. And it goes back to my disclosure at the beginning. This is my best understanding of it right now, and I feel like with how many things are changing, it's difficult to keep up with. So I just want to have people getting a baseline knowledge of this. So Costa said that was from an SBA webinar yesterday. Great. So hopefully that's the truth, and you'll be able to choose an 8-week period. I would love it if we could have that 8-week period begin on June 30th for a lot of my seasonal restaurants. But that's the concept of this reduction in wages. If you have had a reduction in your employees, then it could reduce how much you get forgiven. If you reduce how much you pay your employees, it can also reduce how much you're forgiven on, assuming that those employees that took reductions in salaries did not make in excess of $100,000. So another thing that you're going to have to do is make good faith certification requirements. An eligible recipient applying for a covered loan must make a good faith certification that the uncertainty of the current economic conditions make it necessary that a loan request to support the ongoing operation of the eligible recipient. So things are bad. I needed this loan to survive. Acknowledging that funds will be used to retain workers and maintain payroll or make mortgage payments, lease payments, and utility payments. The eligible recipient does not have an application pending for another loan under this subsection for the same purpose and a duplicative amount applied for or received under a covered loan. So I actually think that that's trying to use an EIDL and a PPP for the same purpose, or trying to take out the same loan twice. You're not able to take out 2 PPPs. I do think that the underwriting in this is going to be pretty lax, so they're going to be probably cranking these out to the point that they might not even be able to check whether you already have an application pending. I do think that people are going to go to jail for fraud for trying to dupe the system, so don't be one of those people. Just take what you're given. There's a lot of really good opportunities here. Just be careful. Costa is giving me another great question. Let's see what it is. That would be great is the May 4th closure. A lot of restaurants are going to struggle. Yeah, so the reason I launched this morning is I talked to JB, who owns Sharky's, New England Chowder Company, and the Copper Walk, and many other restaurants on Martha's Vineyard. And he and I had a great phone call, and he recommended that I do this again for some restaurant people. If you have to use the 8 weeks starting today, that's certainly going to be a huge disadvantage. And it would be questionable whether you should bring those employees back based on the definition of payroll cost. Another thing to keep in mind is these programs have budgets and they could run out. So Mark Utera asked a great question. He asked, have they determined a rate of non-forgived loan funds used? So if you take out this loan, the way it was written in the bill, let's see if it's in here still. During the period. Yeah. So you have deferred payments. So you will be able to defer your 7A payments for 6 months to 1 year. It is my current understanding that if all of the loan is forgiven, there would not be any accrued interest. However, if it's not, there would be. So you can have it deferred for 6 months up to a maximum of 1 year. An impacted borrower is eligible and is an eligible recipient who's in an operation before February 15th and has an application for covered loan approved or pending after the date of enactment. This loan is a non-recourse loan. The administration has no recourse against any individual, shareholder, member, or partner if an eligible recipient of the covered loan for non-payment of any covered loan unless it's used for purposes not authorized. So the government can't come back at you for this loan if you went out of business, for example. There is no personal guarantee on this loan. So as you recall on the 7B, if you took out a loan greater than $25,000, they were going to make you put a personal guarantee of your assets, so your home and everything else. The PPP does not have that guarantee and no collateral is required. There are also no fees. I've heard rumors of companies charging fees to help people apply. I'm not really on board with that. If you guys need help, let me know. I'll give you guys some guidance for free. So using both loans, they just can't be used for the same purpose. The EIDL can possibly be refinanced if you did duplicate your purposes. The EIDL is a 30-year term, and to Mark's question, the PPP is up to a 10-year term at up to 4% interest, but can be forgiven. And that has changed the way it's written on SBA.gov. So the way it's currently written says that it's a two-year maturity at a rate of 0.5. So when I say that the legislation is constantly changing, I'm not sure if I have that like really readily available right now. Let me just see. Yep, I do. So I'm going to do a quick screen share here. So Mark asked, so this is a great overview of all the different programs. I am going to send this out to any of you that came today. So the Paycheck Protection Program, Paycheck Protection Program. Here's a program overview. And then if you come to the loan details and forgiveness down here, and this is on SBA.gov, this loan has a maturity of 2 years and an interest rate of 0.5%. So pretty discouraging, actually, because we were all hoping for this to be a 10-year note at 4% interest. That's a bear for cash flow. So we're not going to be able to just bury a bunch of stuff in there and say, all right, so we'll be able to pay that over 10 years. That's a great program. It's possible, but as it's written on SBA.gov, 2 years, 0.5% interest. And that changed. So. Delay, everybody. Okay. Delay of payment of employment taxes. JB, I hope you're in the house right now. We have participants. Not sure if he is. Yes, you are. So this cannot be used if you're going to use a PPP. If you're going to use a PPP, you can't use it. Employers can defer employer Social Security taxes from March 27th through December 31st. So again, I also have seen that the president is talking about having this done anyway, so I'm not sure that you would want to cash in on this one in order to not take the Paycheck Protection Program. But 50% of what you defer would be due January 1st, 2021, and the other half would be due a year later. So I'm going to skip ahead to the employee retention credit. This is the one that I wanted you to pay attention to. Employees who receive the PPP loans will not qualify for this retention credit. All employers are eligible for a credit of up to $5,000, representing 50% of the first $10,000 in wages paid this year. Credits are limited to the total number of Social Security liability for the quarter, but reduced by the FFCRA credits taken against those same taxes. Limits also apply to qualified R&D credits and WOTC credits for employment of qualified veterans. Employers with 100 or fewer employees can take credit for all employees. Employers with 100 or more employees can only apply the credit to employees furloughed whose wages continue for business closure related to COVID-19. Employers are eligible for this credit if their operations were suspended due to a COVID-19 related order, or they have 50% less cash receipts for the same period for the prior year, unless the quarter prior to the credit period has increased gross receipts of 80% to the prior year. Employers may take this credit against their current employment tax liability. So if you've got 10 employees, you could be looking at $50,000. If you have 100 employees, could be $500,000, but you're looking at you have to have the tax liability to be able to offset it. But an interesting one worth exploring with your CPA. Expansion of unemployment benefits. So the people that you've laid off at this point are now going to get an extra $600 a week on the federal side. So they're going to apply through their state government to get their state unemployment, and then the federal government is going to give the state an extra $600 to give to the employee. Through July 31st, 2020, the federal government will provide temporary federal pandemic unemployment compensation of that $600. It will be paid in addition to and at the same time as the regular state or federal unemployment benefits. And combined with the underlying state unemployments, it should replace 100% of wages for the average U.S. worker. The federal supplement would not affect the eligibility of Medicaid for Medicaid or the Children's Health Insurance Program. The state's unemployment program would be fully reimbursed for the cost of administering this. States would be permitted to expand eligibility to provide unemployment compensations to workers who are not normally eligible for benefits, so long as their unemployment was connected to the COVID-19 pandemic, as determined by the state and Department of Labor. Reimbursable employers would not have to take charges against their accounts for these benefits. All unemployment-related questions need to be directed to your state's unemployment office, or you could consider hiring an unemployment management company. I have a new chat. So Costa said, this is also an issue as employees are scared and don't want to return. Plus, employees are making more on unemployment rather than working. And that, Costa, is a great point. If you get this PPP loan and you can't get anybody to come back to work, you're not getting anything forgiven. So I agree with you. If they're getting an extra $600 a week, they could be making more on unemployment than they do working for you. So just keep that in mind when you take this PPP. You're not taking a grant, you're taking a loan. That loan might need to be repaid over a 2-year period. So it certainly is something to consider. Health spending accounts, for those of you that have employee benefits like high deductible health plans using an HSA or an FSA, it allows for telehealth services to be provided pre-deductible by high deductible health plans. For plan years starting after December 31st, 2021, telehealth and other remote care services could be covered pre-deductible without violating the federal rules for these plans. It also will allow you to buy over-the-counter medications like Tylenol at CVS using an FSA or an HSA without a prescription for expenses incurred after December 31st, 2019. The new legislation eliminates the prescription requirement imposed by the Affordable Care Act, and it also allows for reimbursement of menstrual care products by the Healthcare FSA, HSA, Archer MSA, or the HRA. These items are now defined as an eligible medical expense under Section 213D of the code. And that, folks, is my deck. So I hope you all learned something today. If anybody has any other questions that they wanted to ask me, I would be happy to take a few. But otherwise, you're welcome to leave. I appreciate you coming. Right. Employees are required to be available for recall in order to receive UI benefits. If they refuse to return, they might lose their benefits. Correct. Correct. So, Jackie, I agree with you. Just a decision on, are you going to pull the rug out from underneath them? You know, these are people that you've probably known for a really, really long time. If push comes to shove, yeah, I agree with that. You should have the ability to recall them back to work. If anybody else has questions, I'm happy to hang out and answer any others. But if not, we will conclude. Right. Costa said you can't dispute right now due to COVID-19. But if work is back, if work is back in session and things are open. Oh, I had Q&A. Oh man, I missed a bunch of questions. That's great. I apologize. So Laura asking for copies of the presentation. That's a no. I spent tireless amounts of hours building this presentation. At this time, I'm not sharing it with anybody because I do not want to see my presentation with somebody else's name at the top of it. I may be putting up a recording of my presentation in the very near future, but it's something that today I'm not going to be providing. JB had asked a question and said, and we don't know amortization. So you're correct on the 2-year repayment. We don't know how they're going to amortize that loan. Cliff Sands, thanks for joining. If you're still here, yep, you are. Do we need to apply through the banks or can we do it online at SBA.gov? Cliff, there's two different loans. There's the EIDL, which is the beginning part of what I covered, and then there's the PPP. The EIDL is going to be applied for at SBA.gov/disaster. And the PPP, we should be able to help people with that starting tomorrow, or your local bank that's an SBA lender. And Amy, I do not know when the extra $600 will go into effect for the federal stimulus. I'm not sure of that. All right. Awesome. If there's any other questions, please let me know. I'm happy to answer them. I've spent so much time researching all of this. All right, so we have. Okay, so Jackie asked a great question. Thanks, Jackie. When we applied for the $10,000 grant, did we initiate the EIDL loan process? Yes, you did. You entered a queue to have a loan officer from the SBA contact you to talk about your specific situation to get that EIDL loan. Yeah. If there's any other questions, I'm happy to answer them. If you're thinking them, other people are thinking them. I will continue to host other webinars. I'm doing one next Tuesday on the Families First Coronavirus Act. Yeah, so Jackie asked, haven't heard that the check will be issued in 3 days and she hasn't seen anything yet. I did just check my bank account this morning. I reapplied on Monday. I still haven't seen the $10,000. I applied for the first time for the EIDL and the $10,000 grant on March 18th, and I have not seen a time yet. And they actually told me that we had to reapply for that $10,000 grant, and it says 3 days, but I'm not going to hold my breath for it. If you need cash in the short term, I do recommend that you consider using a bridge loan product, which I did cover earlier in the presentation. So let me just bring this right back up for you, share. So this bridge loan product right here, it's up to $25,000. It's with your existing bank. They might be able to quickly get you $25K that you will be able to refinance into your EIDL loan when it finally comes. So I hope that helps. All right. So I will send that follow-up email. Thank you very much for joining. I really do appreciate everybody's time. I hope you guys all survive this. I know it's not easy. It's scary. Educate yourselves and do your best to make sure that you're fighting for your business to be around tomorrow. If I can be of assistance in any way, please contact me directly. You can email any questions to service@brabopayroll.com. My team will be able to let me know what questions they can't answer and they need me for. But I'm cheering for you guys. Thanks for coming.
Thank you.
Bye.